Identifying the correct key support and resistance in trading can be one of the most frustrating things. You can have two traders trading the same strategy, and yet one sees resistance here and the other sees resistance over here. And the worst part is that both of them can be right. Because when it comes to trading, it's never black or white and there's no correct answer. And if you get the key levels wrong, you will end up buying into resistance or selling into support. So wouldn't it be good if you could have a tool that objectively tells you where the key levels are? A tool which, when used by multiple traders, would still give the same exact levels. I'm talking about an objective way to determine support and resistance, not a subjective one that requires experience or judgment from the trader. Yes, that's right, you don't have to be a pro trader or an experienced trader to use this tool. Well, such a tool exists and I'm going to share this tool with you in this video. If you stick around till the end, I'm also going to show you how to use this tool as a profit target. And no, it's not going to cost you $100 a month or anything for it. It's only going to cost you a thumbs up button, so please hit that thumbs up button to support the channel. Otherwise, this video may not load and come on, you don't want to miss this, especially when I've just sold you on how powerful this tool is. Jokes aside, I hope you're excited because this tool will solve this big problem that many traders have. If you are new to the channel, do hit the subscribe button and turn on the notification bell icon as well so that you won't miss out on any future videos that I upload. Now, do encourage you to pay close attention and watch it till the end. We do a giveaway worth $37 for our plug and trade trading package. So if you wish to participate in our giveaway, then look for an emoji somewhere in this video. You can also find the full instructions in the pinned comment down below as well. So let's jump straight into the tool. This tool is the Open Interest Heat Map and it looks like this. I will leave a link to this Open Interest Heat Map in the description down below so that you can check it out after watching this video. But for now, pay close attention and do not start messing around with the Open Interest Heat Map on your own first. Otherwise, you might miss something important, misapply and start losing money. That's not something I want for you. Now, because we are interested in trading Forex, then click on the Select Product tab right here and select the Foreign Exchange sub-tab. You should see the various futures contract, something like this. So quickly, let me explain what the Open Interest Heat Map shows. The Open Interest Heat Map is a tool that tracks where an asset or currency pair's positions are being accumulated. Now, it is very important to understand that this is for the futures market, not the spot market which most of you are trading. In a spot forex market, there are no calls and puts. You will only find calls and puts in a futures market. Now, I don't want to confuse you with futures and what calls and puts are because that's beyond this video scope. What is important is that you understand that we are using the futures market as a proxy. We still need to go to the spot forex chart to check if these levels are valid. Anyway, we never trade off a key level just because it is a key level. If you have been watching the videos on this channel for some time, you will know that this is a pointer that I always stress, and I will repeat it once more. We never trade solely based on a key level. We have to consider the market context and watch for a reaction at the key levels. So technically, these key levels are only one part of the equation. Anyway, I digress. Back to the Open Interest Heat Map. The first thing you want to do is click on the total open interest in the left column over here. This will show us what the total interest is. Once you click that, you will see a table like this. What this represents is the volume of contracts at a given level. So at a strike price of 120, there are approximately this amount of contracts. The idea behind using the open interest heat map to find key levels is straightforward. A level is important when a lot of people are looking at it. So we want to look at the strike prices that have the highest volume. Logically, if there is a lot of volume around a level, then that level is important. Sometimes you can eyeball it, but other times when it isn't too clear, you might have to use a calculator to count and see which level has the most volume of contracts. The heat map is also color coded to show you where the volume is. So right here, you can see that the cell is shaded bright green because it has the highest volume in the column. Contrast this with the other cell below here, which is shaded in a lighter shade of green. From this heat map, we can see that 1.19 has tons of volume. As of right now, Euro-Dollar is trading at 1.19345. Now, obviously, if you are day trading, then levels such as 1.23 or 1.175 might not be relevant immediately. So you want to focus on the levels which are near the current price. In this case, it will be the 1.19 level. As I mentioned earlier, this is the futures contract and does not reflect the spot market. Thus, it is essential to take this level and cross-check it with the spot market. So head over to the Euro-Dollar spot market chart and plot out the 1.19 level like this. Do a quick check to see if the level provided by the open interest heat map was strong historically. In this case, we see that yes, the 1.19 level is very strong, and thus we can confirm that this is an excellent key level to look for a possible trade setup. So this is how we use the open interest heat map to identify key support and resistance levels. Can you see that it doesn't require much experience to pull off? And two traders who look at the same open interest heat map will arrive at the same level. This is the power of using the open interest heat map to find your key support and resistance levels. Now, a gentle reminder that we do not simply trade off the key level directly. You have to use a profitable trading strategy at the key level. Now, if you are new and do not yet have a trading strategy that plays the odds in your favor, then I will leave a link to one of the trading strategy videos that I have previously uploaded at the top right corner and at the end screen of this video. But for now, let me quickly run you through another example of the entire process of identifying key levels with the open interest heat map. For this example, let's do the Aussie dollar instead. To do this, we need to switch over to the Aussie dollar futures open interest heat map. So click right here and under the foreign exchange tab, we select Aussie dollar. And we get the heat map that looks like this. Now, at the time of recording this video, the spot Aussie dollar is trading at 0.773. So assuming that you are day trading, we want to focus on the key levels closer to the current price. There's no point in looking at a level like 0.80 or 0.70 because it isn't relevant. At a glance, we can see that the 0.77, 0.775, 0.78 and 0.785 levels have quite some volume. These are the levels where there is a lot of interest. We take these levels and plot them on the Aussie dollar spot chart and check if these levels were strong in the past. And it looks like all of these levels are strong except the 0.785. So we remove the 0.785 and use the rest of the key levels. So this is how we get the key level. Now before I end off this video, I want to show you how to use this heat map as a profit target. Suppose you are long Aussie dollar at the current price of 0.775. You expect 0.775 to hold as support, therefore you are long. Now, because there are many interests at 0.78, it acts like a magnet and you can expect the price to move towards that level. So obviously, that should be your take profit target. Of course, do set your take profit a couple of pips just before the level. You don't want to target the level exactly and see price fail to hit your take profit level by a couple of pips. The same concept applies if you are short at 0.775 instead. Price will be attracted to the next high volume level at 0.77. This is a straightforward way to determine where you should take your profits and run. Summing up this video, I explained to you that the open interest heat map shows the volume of calls and puts for the futures market. Though it's for the futures market, we can however still use it for the spot market as a proxy. We look at the highest volume prices and proceed to cross-check it with the spot market. Once we confirm that the level is indeed a strong level historically on the spot market charts, we can use it as the key level. And that's it for this video. I hope you got a ton of value. Don't forget to hit that subscribe button if you have not. As promised, I will leave a link to one of the Forex trading strategy videos at the end screen over here. Do watch it if you do not yet have a trading strategy that places the odds in your favor. Thanks for watching. I'll catch you in the next one.